Feels a little old economy, old world, new world, with an upstream oil and gas producer and biodynamics after, but I'll do what I can to articulate our story. I think some of you, we've got, I think somewhere like 90 people on the call, so I'm guessing some of you may be shareholders, but I'll go through pretty high level what President is about. As I said, we're an upstream oil and gas producer, predominantly in Argentina, and the picture on the front is actually of our primary asset. It's an asset we bought a couple of years ago from Chevron. Quick background as to myself. I'm a mechanical engineer originally. I was with Shell in the 90s. I then did an MBA, became a banker for about 10 years, and spent a lot of time in Russia, Kazakhstan, a lot of Africa. And whilst I was a banker, I met a gentleman called Peter Levine. I helped him at his previous company, which is called Imperial Energy in Russia. So when I left ABN AMRO, I became finance director of an East African explorer called Dominion Petroleum that was subsequently sold to Ophir Energy, some of you may recall. And then secondly, when I left the bank, I became a non-exec with Imperial Energy that I joined in 2007. And then in late 2009, we sold to ONGC, the Indians, probably at the top of the market, I think it's fair to say, with hindsight. So I'll just run you through. There are quite a lot of detail in these slides, but you'll be getting the pack after, and I'll try to answer whatever questions. That's obviously the most relevant and most interesting part, answering questions. So I'll try to give plenty of time for that. But obviously there are details on the presentation, so anyone who has questions after should feel free to email. Usual disclaimer. For those of you that just want to watch one slide, this is really try to set out why, in a nutshell, what we think of where we sit. There are some of you that may have, for good reason, gone off oil and gas altogether. Some of you that want to look at it. Some of you may just look at the North Sea, etc. What we are is in Latin America, in Argentina, as I said, and what I've set out here is based on some numbers that we received from brokers, which I'll show, I think, in slide 10 later on. A couple of relative valuation metrics. I think it's very easy for companies to come on and give absolute metrics. What I've tried to do here is to set us amongst a peer group of something like 10 other Latin American focused producers, and two commonly used metrics for investors are enterprise value, which is obviously market cap plus debt divided by 2p barrels of oil equivalent, and you'll see there President is currently trading at around 1.5 versus a peer average of around 4.9 with a max of 10.7. And then on a barrel of oil equivalent per day on a flowing barrel basis, because reserves in the ground are great, that's future cash flow, but a lot of focus clearly on cash flow today. We are trading at roughly just over half average and well below the peak, but I'll come back and highlight those on slide 10, as I said. Just a couple of things to point out. That's fact, and I'm not arguing either way, but I just wanted to raise a couple of points. One is our clear focus on cost control, which, as I'll show shortly, has enabled us to weather the storm, so to speak. We have relatively low operating costs in our main asset, just under $14 a barrel of oil equivalent, and low G&A. And importantly, that's on a year-on-year basis is down 25% and has actually gone down further since the start of the year. Some of you will know, and we'll come back to that, we have a majority, or our largest investor is our executive chairman, Peter Levine. And as I say to people, it's sometimes like having an activist investor on the inside. I think a lot of AIM companies suffer from a lack of alignment, a lack of activism. Institutional investors will tend to, if they don't like what management are doing, will more often than not tend to sell up and move on. In President, we've actually got someone on the inside who every dollar we spend, a third of that is his, and boy, do we know it. Third-party debt, the reason I make that qualification is that there's some debt, again, from Peter, just over $10 million right now. We did a conversion earlier this week, but third-party debt is now down to just under 0.3 times adjusted EBITDA 2019. So again, on a relative basis for a producer, we think that's quite low from a leverage standpoint, and it's leverage that people need to worry about, or investors start to worry about in low oil price environments. Low margins and challenges with servicing debt, I think, is quite important. But President is extremely resilient in that respect. Management equity, I just highlighted. Peter has just under 29.95%. The rest of management have smaller interest, obviously, but it creates a high degree of alignment, and we certainly see that coming through. We announced on Monday, I think Monday, we put out 3 RNSs, which is for us a record. The most important of which is probably the EGM, the completion of the transaction to bring Trafigura, a leading, I think, arguably number 2 in terms of volume behind Vitol, but leading oil and gas trader, converted an element of a prepayment they did with us last July, sorry. They converted 4 million in January, and they've now converted the balance into equity, so they've become a 16% shareholder. As a result of that, they have picked up a board seat, and we've actually just had our first board meeting together with our new representative this afternoon, sorry, and it's extremely constructive. We can already see a number of opportunities that have been identified to help improve our margins further, to look at other opportunities. So that's it's a watch this space. But I think of all the things that have happened to the company over the past 12 to 18 months, I think the entry of Trafigura, our primary offtake, onto the register as a material shareholder is very exciting for us. ESG, obviously everyone talks about it. We have had the IFC as a material shareholder, a World Bank entity, since probably 2014. And so as a result, we've had to adhere to quite strict World Bank environmental standards. We publish payments to the governments. They visit us each year. They visit our operations. They assess them against particular metrics. And obviously, if they don't like what we're doing, we get to hear about it. So in summary, I think some that are existing shareholders, like many oil companies or oil and gas companies out there, will have had frustrations in the past, and I've been particularly poor myself at investing in other small companies and have won some and lost lots. But I think if we look at President today, which I think the reality is that's the way each of us look at investments, our own investments into a company like this, and us with our investments out. We have an existing, demonstrably robust existing portfolio of assets. We've been tested in adversity over the last 4 months, and I'll talk a little bit about that. We've got significant organic growth potential. Our story isn't dependent on an other deal, but we're very clearly looking for opportunities. And if we look at, again, Trafigura coming in, they're an extremely large and very successful trading entity. They've not converted a secured position into equity for fun. They see an opportunity. As they said today, they see every barrel flowing in and around Argentina. So there are significant opportunities both there and potentially elsewhere. And so that's in a snapshot for those of you that want to go and take a cup of tea now. Next slide, just to show where we operate. Argentina is obviously our core focus. For those of you that have not been there, it's an extremely large country. To fly anywhere from Buenos Aires is probably 3 hours south, 3 hours north. We entered originally into Salta up in the north, Questa Guardian. We have 5 fields up there. We're producing somewhere around 350 to 400 barrels a day. But what has transformed the company was late 2017 when we entered Rio Negro, which is in the Neuquén Basin. Some of you that follow other companies such as Phoenix will be aware that Phoenix are predominantly active in the Neuquén. Vaca Muerta, unconventional. We focus purely on conventionals. Unconventional is really a big boys game. US, we have an existing, arguably a legacy asset, but it's an interesting asset. It's very limited in terms of focus for management. It takes very little effort from our side. We have one representative there, but we do, on an opportunistic basis, look for additional opportunities to build out that. We have some accumulated tax losses, and so potential opportunities can be quite significant, particularly in the US, given that a lot of focus in recent years has been on unconventional. So there are some good conventional opportunities that we do look at periodically. Paraguay has had a long history within the company. I'll come back to that, but in 2014, I think it was 2015, the company drilled a number of quite expensive, reasonably high profile and arguably unsuccessful wells. the asset still sits in the portfolio, and I'll explain why when I get to that slide. Just looking at the board, with 2 executive directors. As I said, my background, I've been 28, 29 years in industry. Mr. Levine, Peter, was executive chairman at Imperial, where we sold it for somewhere around $2.5 billion in 2009. Jorge is Argentinian, ex-IFC, based in the United States. Alex Moody Stewart, long-standing Schlumberger senior manager, and more recently Martin, who joined our board today, I think, if not yesterday. Argentina, we have some 20 employees in Buenos Aires, a number, give or take 20 in the field. Contrary to the way the presentation looks, we don't make them wear uniforms, white shirts. Someone thought that was a good idea for the presentation, but what is important is that the only 2 foreign gentlemen or foreign representatives, the 2 we show there, both have been in country for some time. The rest are Argentinian, and that's really the way it should be. And when we talk about managing foreign exchange risk and other risks in Argentina, it's really about having trusted locals. It's not about me as a Brit sitting in London trying to call which way the peso dollar is likely to go and what that means in terms of our business. It's really about having people on the ground that we trust and can work with, and we've been quite successful, as we'll show in a sec. Share register is off the back of the conversion by Trafigura. There's been some further movement, obviously. People got excited that when Schroders, I think, put out a TR1 early this week, or we put it out after receiving from Schroders. That's reduced their percentage holding, but that's not actually reduced their total holding. That was a rebalancing based on the denominator. But again, it's Peter at the top, Trafigura in at around 16%. Schroders is our 3rd largest shareholder, IFC, a private family office, and then others make up the balance, of which I'm sure there are some on the call as we speak. Reserves, good reserves position, somewhere around just over 20 million barrels of 2P, both up in the north of Argentina, some resources some reserves in the US. As some of you may know, in Argentina, we need to have our reserves audited every year, and we actually are required to rotate auditor, so we can't sit with our same bunch of friends. So these numbers were published, I think, in February of this year. And are obviously on our website. Some interesting exploration resources that we'll also just touch on shortly. A number of, just a summary overview of activity. I have to say the workover symbol looks a bit like a cake from where I'm sitting, so apologies for that. Presentations is not necessarily my biggest expertise. We don't spend excess funds on fancy presentations. But what is key inside this is that as we announced earlier this week, we will be drilling this year. As I said, I gave a presentation yesterday, and you know, it's tried and tested mantra that when nobody else is drilling, that's the time to drill, because rigs don't disappear. They're sitting stacked, and service companies are looking for ways to utilize. So we've certainly not been shy in recent years in getting extremely favorable payment terms, and that's something that we're looking at right now. But we announced, I think, at the start of the week, the intention to drill a couple of wells this year, and we've been talking about further drilling rolling into 2021 that we'll give updates on in due course. We just look at you know, where we are. We've just put out at the start of the week, we put out our audited numbers, and shareholders will, I think this evening, our annual report is being posted out, so shareholders will receive that in the coming days. People also on our website will have our AGM on, I think, the 22nd of July. But in terms of our snapshot of audited numbers, average production was around 2,400 barrels of oil equivalent per day. Turnover just over 40 million, which we think is not bad, certainly when compared to where we sit as a company on the market. And adjusted EBITDA, we set out the basis for that, somewhere around 12 million. So that was 2019, but that's already hard to believe, 6 months passed. If we look at what's happened in 2020, obviously there's been a material decline in Brent oil prices, and notwithstanding what we've also seen in Argentina, we can talk a bit about, is that the government has signaled its intent to provide a degree of protection to the domestic industry. As I'll come back to, they're still a net importer. They recognize that they have oil and gas in the ground, and so are looking to protect that, and so they've set a higher domestic oil price than the equivalent would be with Brent at $40. At $40 Brent, Medanito, the Argentinian blend, would have been trading at around $30 to $32. The government is in the process of implementing a decree at a level of $45 domestically. So if you look at the what that's meant in cash generative terms, some $4.5 million we've generated through a fairly tough period. Obviously, the second quarter was particularly tough, as we've discussed with a number of shareholders who've asked. The theory of a higher fixed oil price is great, and if they were to set it at $100, would be fantastic. But we still need to ship our oil, and there's obviously been a significant drop-off in demand, as there has been in every industrialized country, and that's obviously led to a significant decline in prices itself. And so what we're all focusing on now is how quickly Argentina starts to come out of the lockdown. And on every metric, certainly compared to a number of other of the larger economies in Latin America, they've come through relatively unscathed, as best as you can in a pandemic. But we're starting to see evidence of industry picking up, and as a result, prices, demand is starting to pick up, and hence prices. What has been helpful for us is that we've not shut in, or not had to shut in at all. Some of the followers of other companies in Argentina will know that production has had to be shut in. That's not an issue we've had, and that certainly shows a demonstrable benefit from having our main shareholder, our main off-taker as a shareholder. There's a good degree of alignment, which is very important in a challenging market. If we look at the next slide, lots of graphs and numbers. Really, the top line is showing what has happened to the company in recent years. I've been myself involved in President probably for 3 years. I was a non-exec for a year. I've been an exec for the last couple of years, and really seeing post the acquisition from Chevron, there's been a transformation in terms of the underlying business. Production has gone up significantly, reserves have risen, and operating position has gone from loss to profit, generating operating profit. But obviously what has still happened for various reasons, our valuation metrics appear to have declined. And so again, that's just a given. We can debate till the famous cows come home why and the reasons therefore, but it's reality. Next slide, really just you can spot your favorites, play spot the ticker, but these are based on metrics that I've received from one of our brokers. I thought it would be interesting just on a relative basis to say, okay, let's look at the type of company that President is. It's a low risk producer, improving sustainable value creation year on year, as opposed to others that may have transformational exploration success once in a while. But let's look at the set of companies that are real, developing have a similar business model, and we sit at the low end on both metrics. Just a quick look at Argentina, which I think is interesting. As I'd said, a continued energy deficit, and what that means as a result, the government is looking at ways to stimulate domestic investment. They've limited imports, have set a higher domestic price, are looking at putting in a higher gas price to encourage gas development. So these are all positive signs. And what's interesting for us on the positive, this is a country that the government has clear track record of supporting the industry. It's not something that's come in now and has not been seen before. So investors can take some comfort that within a country like Argentina, that a lot of people will look at on the face of it and think is quite politically risky, and in a lot of areas it is, particularly if you're a foreign investor in bonds, for example. There are perennial challenges in terms of restructuring, but if you actually look at the underlying impact on the oil and gas industry, it's actually quite limited, and that's what creates, to our mind, an anomaly, creates a potential advantage, because some people will look at Argentina generically and say, not for me. Others will do a little bit of work and say, okay, I understand, but what's the implications for a company like President before I say no? Because others have said no without looking at it. Maybe that creates an opportunity for me to buy into an imperfect market. And that's illustrated, for example, by this next slide. I think if you look at the way that dollar sterling has performed, dollar peso over the last 18 months, there's been a significant decline in value. But in reality, President has lost around 1% of revenues in cash terms. And I think if on an equivalent basis, dollar sterling losses would have been far more significant, because people haven't believed that the sterling was becoming somewhat of an emerging market currency, and I think there are some that argue that's the case. We know the peso is volatile, and we're set up to deal with that. Just a very quick run through our assets. I think I don't see any timer on my screen, but I'll just run through these quite quickly. This really just gives an overview of our licenses: Questa Flores and Estancia Vieja down south, Questa Prado, Las Basas for the two licenses we picked up more recently. And what's important with that second acquisition is the gas pipeline. So that enables us to quickly monetize gas resources, which is particularly important. Gas reserves are great in the middle of nowhere. In the middle of nowhere, if there's no way to monetize, it's more of a challenge. A number of slides. These are holiday photographs I've taken. So aside from being FD, I'm also chief photographer. This is Questa Flores, Estancia Vieja. There's some information around those specific assets that people can consider at their leisure. Questa Prado, in the middle, the more recent acquisition. Las Basas, the gas asset. Angostura is a license we picked up more recently. The previous four, we have 90% interest. 10% is with the local, the provincial oil company, which we think was certainly proven to be a smart move from our part. We fund and then we claw back any funding that we provide from their share of the profit oil. So it's a loan type activity, but it buys us good favor with the provincial government. Questa Guardians up north, significant reserve base. We've got a much longer license there. Economics there are worse than they are in Questa Flores. And so with in capital constraint, we've been focused on the south, understandably. But this is an area where we think Trafigura can help us. Margins have been quite weak up north, partly because oil prices have been lower than Medanito, and also service prices have been much higher given the remoteness of the location. But service prices are coming down, and we think there are smarter ways to reduce the discount to Medanito blend that we're working on. Louisiana, not much to say about that. It generates some $150,000 a month in free cash, which is helps to cover costs in the UK and elsewhere. Quick note on Paraguay. We'll say more about Paraguay in due course. This just gives an overview. That's the rig that was drilling our wells in 2014. What's relevant about Paraguay is this pretty picture. I think if you can see my cursor, but that shows the Argentinian-Paraguayan border. And the reason President got into Paraguay originally was because of the Cretaceous experience in Argentina. Some 50 million barrels plus have been produced in oil, have been produced from the Argentinian side of the border. And the logic goes that geology doesn't stop at the border. President acquired acreage on the other side, on the Paraguayan side, got distracted by the deeper gas, the Paleozoic opportunities, the Bolivia north-south trend, and so drilled what wasn't the original intent with going into Paraguay. One well failed to find any sign of hydrocarbons. The second well was a good old-fashioned technical success. There were shows, but at that stage the company had spent so much money it didn't have the wherewithal to continue, and so suspended operations. So what hasn't gone away is the original concept, Cretaceous, and that's very much on our plans. We've said something in our RNS earlier this week about some discussions we've been having. They will continue, as those of you that follow small oil and gas companies will know. Farm outs are great, or they're particularly great once they get done. We could have 100 conversations that are worth nothing if none leads to a deal. We can have one conversation if that leads to a deal, and we will say what we can when we can. But this certainly hasn't gone away, and hopefully that gives a background as to, or help you understand the basis for why we're still talking about that license. So in summary, we think we have a clear strategy. We have extremely tight alignment, certainly between Peter and now, interestingly, Trafigura as our primary off-taker. We're really excited by that. As far as we understand, they have very few, if no, other equity investments in upstream oil and gas companies. So they like something about what we do. And we think, again, it's that alignment with Peter, and the way that we focus on tight margins means that we're a survivor in difficult environment. ESG, strong principles, supportive shareholder base, both organic and inorganic opportunities. What is important, we think, again, people pass us by because they read in the FT about Argentina, but we do try to provide a lot more information, and hopefully we've just given a quick snapshot as to why if you look a little closer under the hood, so to speak, there are reasons that we think we're misunderstood. And as the last point, we're demonstrably undervalued compared to peers. That's a given. You may have different metrics you look at. I've taken data from a broker. You can check the existing investments in your portfolio against it. But from if there's interest in Latin America, interested in a producer from a risk profile standpoint, we think we're relatively undervalued compared to that peer set. And with that, I think I'm done.
Okay, first one here, and this came in before it even started. Does President have any plans to drill high angle or horizontal wells in Argentina?
Someone who's an investor probably, or is a long-standing shareholder. We had some bad experience up north, various reasons. It's something we'd always look at, but we try to be as straightforward and as simple as we can. All of the wells we drill at the moment, well, certainly since the well we drilled in, I think 2015, 2016 in Puesta Guardian that didn't go well, have been a straight near vertical, but never say never. But you know, we're rather licking our wounds off the back of that one previously. It's certainly something we'll continue to consider.
I had a question about currencies. You mentioned the peso. Can I confirm so I assume your costs are in pesos?
Yeah, so
the way, but the yes, revenues are in dollars or in pesos?
Yeah, so the way both sides happen is that we invoice in dollars, but we get paid in pesos. So we will, if we sell a barrel at $40, we send an invoice, $40 times 64 pesos equals whatever that equals. So we will, hence we do have a risk when we take pesos in, but most of our costs, some of them are dollar based but paid in pesos. So if we have a drilling contract, that will be linked to dollars but paid in peso. Our local costs, salaries and others are peso based. So we do have an exposure to manage. And what I try to show here is that you know, we do an analysis for the last couple of years, and we've been sitting on the wrong side of the currency relatively seldom, and as a result of, I say, lost around 1% of revenue on a cash basis. It means we need very active treasury management. That's all it means.
Okay. Trafigura had a couple of questions. Firstly, kind of a generalist, what can Trafigura kind of do for you? What opportunities can they bring to you? And someone's asked specifically about the Puesta Guardian. Can you talk a bit about?
Of course, yeah, sorry. So Trafigura, for those you don't know, is a global oil trader. So before we did any deal with them, they were already buying our oil. They have a refinery, they own a refinery, and at the end of the day, you know, a company like ours needs somewhere to sell our product, and the ability to sell it to someone we know and we have a relationship is quite important. And as I said, some of our peers in recent months have actually had to stop producing because their off-takers said, look, we can't take it anymore, or we can't take it at the moment, our tanks are full or whatever. So, you know, we don't get, we're not guaranteed access, but having the ability to work with an off-taker to give us access to the market is particularly relevant. And that's something that we really value. We've always been too small to look at export, but again, with Trafigura now as a material partner, where it makes sense to look at export opportunities, they will help us do that. And then specifically Puesta Guardian, as I said, the sort of primary Argentinian blend is called Medanito. And up north, we get a discount to Medanito because we're selling basically to a captive market, to a refiner up north, and they know they're a captive market. And so with Trafigura now coming onto our register, we're able to look at alternatives, be it trucking down south, be it taking the oil elsewhere across the border. So it just means that as an upstream company, we're not necessarily beholden to someone who you know, takes advantage of the fact they believe they're a monopoly. We suddenly have somebody else who can help us look at alternatives, and whatever you do, if you have alternatives, that hopefully leads you to getting a better outcome.
We've had we're a little bit over time, but I just want to ask you a couple more questions. And one here which is quite challenging, which I think is really interesting. And the question is, with a shift towards green energy, why should a long-term investor consider investing in President? Or indeed, I guess, to any junior oil and gas company, I guess.
Fair question. We're out of time, aren't we? No, you know, I think you know, I think that's a very valid question. I think, you know, it'll come down to what your time horizon is. You know, clearly there is a transition. And we at President, we're called President Energy, so we sometimes think about, should we be looking at solar or other opportunities. We've to date said, no, let's focus on what we do best. Clearly the majors are starting to diversify, to divest, and that therefore will create opportunities for us. So, we think that I've been through these cycles a number of times, and I've heard before that the age of the small cap oil and company is dead. We've lost a function. I don't think that's the case. I say this every time to try to find a more positive expression as to our business model. We're scavengers, right? And we look to pick up assets that have been where the economics haven't been best utilized or haven't been taken best advantage of by larger companies. So we think there's significant growth potential. We're not going anywhere soon. We recognize the transition, and there are much larger companies who are focused on that in the first instance, and we'll do our best to make sure we create as much value as we can out of President.
Okay, Rob, thank you for taking that on. It was a little bit unfair, but I was interested to see what you had to say. We are out of time for Rob and for President now, so thank you very much for joining us this evening. And